Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks that you do, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below. Welcome folks to the Kendall Report. In tonight's video, there's not a lot to talk about. Yesterday's action was mostly some short-term profit taking. We saw the S&P down 0.5, NASDAQ down 1%, and the Russell down 1.4%. But there was no news, no real drivers that were pushing the markets lower. They rebounded a bit off of their lows, and overnight we're seeing some strength across the board in all three indices. As we come into Tuesday, it's even worse. There's virtually nothing coming out at all. There are some earnings reports. Most of the big earnings reports that are coming out tomorrow are after the close, so we won't see those effects until we come in on Wednesday morning. So we're going to just be operating on market sentiment right now, which is basically positive, but there's not a lot of real enthusiasm around the markets. The one thing that did happen yesterday, we saw the 10-year move back over 1.6%, and that isn't going to be material. The big number to watch is 1.7, and we're also coming into a lot of resistance right here at 1.6 to 1.3, so I expect to see it come back below 1.6 over the next couple of days, and that's likely to be at least enough to keep a positive tone in the markets. The only other thing to mention in the front end of the video tonight is the database was flat. There's no real rotation, but we are remaining above the 42% level. I'll go through those details in a minute. But in real terms, the markets are going to be a bit in the doldrums here, it looks like, until we get into Thursday where the big news comes in, possibly Netflix and CSX, and there's some other reports. There's some other earnings reports that are coming out that might get some stimulus coming into Wednesday, but it looks pretty quiet. I'm expecting to see things stay within the typical ranges as far as the market grid goes. So let's go ahead and take a look at the charts and see what they're telling us. As I reviewed the WaveTech database, as I mentioned in the opening comments, there was basically a rotation, although there was a slight rotation to the upside with 518 buys versus 311 sell signals, keeping the bullish percent right now right at the 44% level at 43.76. So this remains above that critical 42% level, and I think it will take a couple more positive days to start to see further rotation. As I mentioned in last night's video, my expectations are that we'll see it move up to around 48 to 52%, and then the key number to watch will be the 62% level. That's where we start to get into very robust trend. For right now, we have an uptrend flowing. There's not any signs that we're rolling over here at this time, but the database remains stable and still seeing a slight positive rotation. As we begin with the review of the S&P 500, we're currently up 9 handles right now, up 0.22 on the session. PPM1 remains right at trend level, 0.2427, and ppm 2, 0.27, ppm 3 is positive as well, not quite in trend mode. This suggests that the 10-period moving average will be very important in this pattern, which is currently at the 4130 level. As we look at the market grid for today, 4146 is S1, so we could see the market move back toward that level. R1, 4164, we've actually already satisfied R1 tonight. So I'm looking for an S1, R2 level. We should rebound back into this pattern around 4173, and there's a possibility of penetrating through the 4173, printing an R3 handle. The current volatility has a very narrow range, so I don't see that becoming anything really material at this time. Taking a look at the SPX, in yesterday's action, we were able to get just below the STX number. That level was 4157, yesterday's low 4150. We rebounded and closed at 4163, which was an S3 number. As we look at today's market grid, S1 4156, just like with the futures, I'm expecting an S1 R2 type level, so that would be a 4156, 4177, but the S1, R1 in a tight range like this are pivot points. So if we did penetrate 4156, we'd go back toward 4149 level, which would be a retest of yesterday's low. It looks like we should manage to remain positive here and print up into that S1, R2 level for the day. Next market I'll cover is the NASDAQ. NASDAQ is up 21 handles right now. We're trading at 13,919. Yesterday we traded down to the 10-period moving average. I talked about that being a dominant level in the pattern. The low was 13,821. 13,827 was that 10-period moving average. We're continuing to have a trend level, so there's only a 40% probability for the market to decline below that 10-period moving average, which for today is 13,862. That should be major support, and that would be close to the 13. That would be close to an S1 R2 expectation also in the NASDAQ, 13,851. But once again, R1 and S1 will be your pivot numbers. So if we took out 13,851, then the next level is 13,800. That would penetrate slightly through the 10-period moving average, so it's not real probable. So look for an S1 R2 today. Next market that I'll cover is the Dow. I have not covered the Dow for a while, but we continue to slip. We've gotten back below all the averages. We traded just above the 200-day moving average, but it's got a fairly steep downslope. This is keeping some pressure on the markets. I'll show you the weekly chart here in just a second, but we are starting to see the PPM start to flatten out and turn up, and we're seeing overnight we're seeing movement toward the S2 number, 9088. That is the low of the day. We should see it support here and probably an S2 R1. We've already satisfied most of that. R1 is 9121, but it does look like we should start to see some support come into the market. So as we look at the weekly chart, we'll see that the support should be right around this 9106 level, which is the 21-period moving average. It's still negative. The trends are still down. I remember talking about this a few weeks ago, but we did have two cycle events coming in. The cycle high came in on 4/2, and that was the beginning of this decline. So this is the third week of the decline. My expectation is that we'll see this set up in some sort of right shoulder or some type of pattern. PPMs are slightly positive, but I think they're going to turn back up as well and remain above their first and second derivatives, which will start to set the tone for at least a bottoming pattern. I think this range that we saw down at this levels down here at this 90 level will be a substantial bottom. I don't see us getting below those levels in this particular pattern. The final market that I'll cover tonight is gold, and we are seeing a cycle event coming in today. This is likely to be a bottom as long as we remain above the 1754 level, which is the 10-period moving average. As we look at the PPMs, they're not in uptrends at the moment, but they are slightly positive, suggesting we should hold at least above the lowest moving average in the pattern, which would be 1739, 1737 range. There's a cluster right there. That will be major support, but I suspect that we'll hold this 1754 level. As you look at the market grid for today, the 1763 is S1. We've had a low of 1765. R1, 1777, high 1775. So we have an S1, R1. I would look to see a move back above the 1777 level to 1784 to an R2. So S1, R2. But all of these markets, when we're in these sideways ranges like this, the S1, R1 numbers are your pivots. So a penetration of 63 would move us down toward this 56 level. And you can see just looking at the daily grid that STX is 1742, which puts us close to those moving averages. A quick look at the weekly pattern. I mentioned in last night's video that I thought we would be sandwiched between the 10-week and the 21-week moving average. 21 is 1807, 10-week 1743, lines up with everything I just talked about on the daily chart. So gold will continue just to be locked in this range. Even if we get a little bit below the 1737 level, it will actually represent a buying opportunity. It's not to be sold here. This market has put in what I believe to be as a major bottom. It's just in the final phases of setting up the next uptrend. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.